U.S. advisor of Exante Data. Amelia, what are your thoughts here as you take a look at the markets and lots of optimism?
Well, we're seeing certainly more two-way risk in the market, more volatility, because the market's trying to balance the much more positive growth outlook that may be arriving a little sooner than some expected with rising rates. And will that kind of quote unquote cut off a recovery? So we're seeing more two-way action, especially in the bond market, also in foreign exchange as well, which is getting a bit more volatile, especially last Thursday with kind of some sell-offs and some high-risk EM currencies that occurred when the VIX rose above 30 on the day.
Yeah, we watch the VIX very closely as well. The Fed, you think they're going to be making any moves at any point, or you think they'll stand pat at least for now?
I think they'll stand pat at least for now. It's really tough for the Fed to do anything because they moved to the average, the AIT average inflation targeting, which suggests that they may move later in terms of the rate hike cycle than in previous cycles to get inflation higher. There's been a lot of focus on reflation in the economy and when the economy will open up. At Exante Data, we did some modeling at the start of the year to show when perhaps with the vaccines and natural infection rate of COVID, we could have herd immunity in the United States. And we put that kind of at the end of June. And we're ahead of schedule, both with the vaccination delivery and getting the doses into people's arms. So it looks like we may reach herd immunity sooner than that date. And that will allow, one assumes, for more reopening in the U.S. economy earlier. And because of that, people are kind of afraid of inflationary forces, especially when the service sector reopens. So that's one hand. But the other hand is that the economy still has a lot of slack. And so that's a deflationary force. And so you do see this uncertainty kind of reflected in some of the rate moves that we had last week. And what was notable about the rate move last week was that the short end of the curve started to move as well, with Fed rate hikes basically being priced for 2022. So that was something new.
Yeah, absolutely. I was watching the 5-year very closely. A lot of people were talking about the 5-year last week. At what point are rates too high? Because you talk about the economy being the other side of things, right? Because there's been a lot of damage done to the economy, but we've been seeing rates creeping higher, to your point, and even some inflationary factors. Just little things like food going up a little bit, gasoline going up a little bit, some of it within the economy, right? We just got in ISM and PMI, and we saw a little bit of that in there as well. But I mean, it's certainly not inflation. So at what point are rates too high? Are you worried about that at all?
We're not worried that rates are too high, but we have to get used to in the market. Once again, we haven't seen this in a while, a steepening yield curve, rising rates, or even a parallel shift up in the yield curve. So we need to get used to that. And that's going to introduce, as we saw last week, definitely more two-way risk. It's going to be more supportive of the dollar. So holding a dollar short right now on a medium-term basis is tougher than it was, say, a month ago. I think in terms of the back end of the curve, I mean, we need to watch mortgage rates. So maybe that will stop kind of the rise in house prices we've been seeing in maybe U.S. second-tier cities where people have left the larger cities and are moving, as we've heard all the stories throughout the pandemic and seen in the data, to places like Florida and Texas. So we'll see. But there also is, on the other hand, an undersupply of houses in the U.S. That's one way that could be, that could cut prices, the rising yields. But we do have to see, and we do have to see. Oh, yes, go ahead.
No, what I was going to say is I meant to add that in there, that even mortgage rates were they were no longer at the lowest point, right? And that those two were moving higher. And you make a good point about the U.S. dollar, because the U.S. dollar is showing some strength today, the most we've seen in some time.
It is. When the front end of the yield curve moves, as opposed to the back end, so when there's more of a parallel shift up, that's more dollar supportive, especially against the EM currencies. And we have to remember that the vaccine rollout is going really well right now in the United States. As I mentioned earlier, we could reach herd immunity a little bit sooner than we originally forecasted at Exante, so maybe late spring. And we're currently only behind, excluding Israel and kind of the UAE, which we're off to a strong start in vaccination. We're only behind the UK, which is doing well, and we're right behind them in terms of vaccinating our population here. So that will also help support the dollar as well. We've seen the pound very strong. It's backed off a little, but it had been above 140 there, and it's creeping up back there today. And the reason why the pound is strong has also been the strength of their vaccine rollout. So currencies are getting rewarded for their economies, the economies that are having the strong vaccine rollouts, which is another different facet of this cycle that we haven't seen previously.